The investment landscape is perpetually shifting, often rewarding those who look beyond the immediate horizon. As we approach Q4 2026, a critical question for many investors is, which sectors, and more specifically, which companies, are poised for exceptional growth? This analysis ventures into the future, dissecting the potential of 7 specific stocks, examining their foundational strengths, emerging catalysts, and the inherent risks that could shape their trajectories. Our focus is on identifying firms whose operational momentum and strategic positioning align with projected market demand several quarters from now, based on current industry trends and expert forecasts. Our investigative methodology goes beyond mere speculation, drawing on a synthesis of financial analytics, industry reports, and consensus projections. We evaluate earnings momentum, not just current figures, but projected growth rates and recurring revenue streams. Valuations are scrutinized against future earnings potential, using forward-looking metrics rather than lagging indicators. Catalysts are identified as specific events or innovations, ranging from new product launches to strategic partnerships or regulatory shifts. Risks are comprehensively assessed, from competitive pressures to geopolitical instabilities. This rigorous approach aims to provide a data-driven outlook for each candidate, as reported by reputable financial institutions. Artificial intelligence stands as a transformative force, reshaping industries from healthcare to logistics. Market research by Equilex Analytics projects the global AI market to exceed $500 billion by 2027, driven by advancements in machine learning, natural language processing, and computer vision. This exponential growth isn't confined to a single application, it's a pervasive wave creating new efficiencies and capabilities across the corporate landscape. Identifying companies at the forefront of this AI revolution is crucial. We seek innovators whose solutions are not just cutting-edge but also deeply integrated into critical enterprise infrastructure, commanding strong market positions and scalable business models. Our first contender is Synapse AI Corporation, a leader in enterprise-grade AI solutions. The company specializes in deploying sophisticated AI models for process automation, predictive analytics, and enhanced customer experience across various industries. Synapse AI's strength lies in its modular, adaptable platforms that allow clients to integrate AI capabilities without overhauling existing infrastructure. Industry reports from TechVision Global highlight Synapse AI's robust recurring revenue model, with over 70% of its income derived from long-term software subscriptions and service contracts. This predictability is a key factor in its appeal, offering stability in a rapidly evolving market. Synapse AI Corporation has demonstrated impressive earnings momentum, reporting a year-over-year revenue growth of 38% in the most recent fiscal period. Analysts at Argus Insights project an average annual revenue growth rate of 30% through 2027, fueled by expanding market penetration and strategic acquisitions. While Synapse AI's current PE ratio stands at a premium of 55x, significantly above the sector average of 35x, this valuation is often justified by its growth trajectory and strong intellectual property portfolio. Investors, according to Wall Street consensus, appear to be pricing in future earnings potential, recognizing the value of its proprietary algorithms and client lock-in. Looking to Q4 2026, several catalysts could propel Synapse AI Corporation further. The anticipated launch of their next-generation Cognito LLM platform, designed for enhanced decision-making and ethical AI implementation, is expected to attract major new clients. Furthermore, strategic government contracts for AI infrastructure development, as hinted by recent federal procurement documents, represent substantial upside. However, risks persist. Intense competition from larger tech firms, coupled with potential regulatory scrutiny over AI ethics and data privacy, could temper growth. Wall Street consensus, compiled by Argus Insights, currently maintains a strong buy rating, with an average price target indicating a 25% upside by Q4 2026. The semiconductor industry remains the bedrock of the digital economy. Every innovation, from advanced AI to quantum computing, relies on increasingly sophisticated microchips. According to a report by Semiconductor Insights Group, the global chip market is projected to reach $1 trillion by 2030, driven by surging demand for high-performance computing, IoT devices, and automotive electronics. The ongoing strategic competition for technological supremacy further underscores the importance of domestic chip production and innovation. Our focus here is on companies pushing the boundaries of chip design and manufacturing, those positioned to capitalize on the relentless demand for faster, more efficient processing power. Our second company, Quantum Logic Incorporated, operates at the bleeding edge of semiconductor technology. They specialize in developing novel chip architectures optimized for AI or ML workloads and foundational components for nascent quantum computing applications. Unlike generalist chip manufacturers, Quantum Logic boasts a deep intellectual property portfolio covering specialized processing units and advanced materials science for semiconductor fabrication. Market intelligence from Silicon Foresight highlights the company's significant R&D investment, consistently allocating over 20% of its revenue to innovation, positioning it as a key enabler for future computing paradigms and maintaining a competitive edge in a capital-intensive sector. Quantum Logic Incorporated has reported robust revenue growth, demonstrating a 28% increase in the last fiscal year, largely attributable to increasing adoption of its AI accelerators. Despite a cyclical downturn in certain segments of the broader semiconductor market, Quantum Logic's specialized focus has allowed it to outperform. The company trades at a forward PE of 40x, which is higher than the historical industry average but justified by its projected earnings growth of 25% annually through 2027, as forecasted by analysts at Chip Market Watch. This valuation reflects investor confidence in Quantum Logic's proprietary technology and its strategic position in high-growth niches. For Q4 2026, Quantum Logic Incorporated has several potent catalysts. The planned commercial launch of their next-generation qubit core processor, specifically designed for exascale AI, is anticipated to be a major revenue driver. Furthermore, reports from industry sources suggest Quantum Logic is expanding its foundry capacity through strategic partnerships, addressing potential supply bottlenecks. However, significant risks remain. Global supply chain disruptions, intense competition from established giants, and geopolitical tensions affecting semiconductor trade could impact operations. Wall Street analysts maintain an outperform rating for Quantum Logic, with an average 18-month price target implying a 20% upside from current levels. The global energy sector is undergoing a profound transformation, driven by climate imperatives and technological innovation. While traditional sources still dominate, the exponential growth in renewables, particularly advanced forms like fusion and next-gen solar, presents immense investment opportunities. According to a recent report by Renewable Market Insights, global investment in clean energy is projected to hit $2 trillion annually by 2030, reflecting a concerted shift towards sustainable power generation. Our focus here is on companies at the vanguard of this transition, those developing scalable, impactful solutions that promise to redefine our energy future, moving beyond conventional solar and wind. Aurora Renewables plc is positioned as a pioneer in the future of energy, focusing on advanced fusion power research and scalable, high-efficiency solar thermal technologies. The company is known for its ambitious projects aimed at commercializing fusion energy, a clean power source with virtually limitless potential. Alongside this, Aurora Renewables is deploying innovative modular solar thermal plants that offer energy storage solutions, addressing the intermittency challenges of traditional renewables. A report from GreenTech Futures notes Aurora's extensive patent portfolio in plasma confinement and concentrated solar power, underpinning its long-term competitive advantage in a critical, burgeoning market. Aurora Renewables plc presents a unique financial profile, characteristic of R&D-heavy deep tech companies. While current operational earnings are modest due to significant investment in long-term projects, the company reported a 45% increase in secured project pipeline value over the last year, reaching $5 billion. Valuations for Aurora often depend on discounted cash flow models that project future revenue streams from successful technology commercialization. Its current EV/sales multiple of 15x is reflective of the substantial growth expectations, though analysts from Energy Frontier Capital caution on the inherent risks of pioneering technologies. Long-term outlooks, however, remain overwhelmingly positive for successful deployment. Key catalysts for Aurora Renewables plc in Q4 2026 include the anticipated successful demonstration of its pilot fusion energy plant, a critical step toward commercial viability. Additionally, new governmental subsidies and carbon credit incentives for advanced clean energy, as currently debated in legislative bodies, could significantly boost profitability. Yet, the risks are substantial. Regulatory delays for novel energy sources, higher than expected project costs, and fluctuating commodity prices for construction materials pose threats. Wall Street analysts generally hold a buy rating, with some acknowledging the speculative nature but highlighting the immense long-term upside potential, projecting a 35% return by late 2026. The global defense sector is experiencing a significant resurgence, driven by heightened geopolitical tensions and evolving threat landscapes. From cyber warfare to autonomous systems, the demand for advanced defensive capabilities is accelerating. A report by Defense Market Intelligence projects a compound annual growth rate of 6% for the global defense market through 2028, with particular emphasis on next-generation technologies. Nations are increasingly prioritizing defense spending to protect critical infrastructure and project influence. Our analysis focuses on companies not just building traditional hardware, but those innovating in areas like AI-driven defense, cybersecurity, and space-based deterrence, securing the future of national security. Titan Defense Systems stands out as a critical innovator in modern defense, specializing in autonomous combat systems, advanced sensor fusion, and cyber warfare solutions. Their platforms integrate artificial intelligence to enhance situational awareness and response capabilities for military operations. Reports from National Security Review commend Titan's rapid prototyping and deployment of cutting-edge technology, often ahead of larger, more bureaucratic competitors. The company's strategic focus on modular, upgradable systems ensures relevance against rapidly evolving threats, securing long-term contracts with various NATO allies and other democratic nations. This adaptability is a core strength, differentiating them in a competitive market. Titan Defense Systems has shown consistent earnings momentum, with a 22% increase in net income reported in the last fiscal year, fueled by escalating defense budgets globally. Their backlog of orders has grown by 18% to over $8 billion, providing strong revenue visibility for the coming years. Valued at a P/E ratio of 28x, Titan trades slightly above the industry average of 22x, reflecting its specialization in high-growth, high-margin technological segments. Analysts at Global Security Capital project sustained earnings growth of 15% annually through 2027, driven by continued geopolitical realignments and increased adoption of autonomous systems, underscoring its premium valuation. For Q4 2026, Titan Defense Systems has significant catalysts. Renewed NATO defense spending commitments and anticipated multi-year contracts for next-generation cyber defense platforms could substantially boost revenues. Expansion into new allied markets in Asia and Eastern Europe also presents considerable growth opportunities. However, the sector carries inherent risks. Potential budget cuts in major defense spending nations, shifts in geopolitical alliances, and increasing public scrutiny over ethical implications of autonomous warfare could impact profitability. Wall Street consensus holds a strong buy rating, forecasting a 28% appreciation for Titan Defense shares over the next 18 months, despite these underlying concerns. Fintech is rapidly reshaping the global financial landscape, democratizing access to services and enhancing efficiency through technology. From mobile payments to blockchain-based lending, innovation is driving unprecedented disruption. A report by Fintech Innovations Lab predicts the global fintech market will grow at a CAGR of 20% through 2029, propelled by digital transformation and increasing demand for seamless, secure financial solutions. This growth isn't just about consumer convenience, it's about back-end infrastructure and embedded finance. We're looking for companies that are not merely participating in this revolution but are actively defining its future trajectory, capturing market share with superior technology and user experience. Nexus Pay Solutions is a disruptor in the embedded finance and payment processing space. The company offers a white-label platform that allows any business to seamlessly integrate financial services, from payment gateways to lending, directly into their own applications and customer journeys. Nexuspace's proprietary API architecture enables rapid deployment and customization, attracting a growing roster of e-commerce, SaaS, and traditional enterprise clients. A recent report by Digital Payments Forum highlighted Nexuspace's rapid user acquisition, with its platform now supporting transactions for over 50 million active users globally. This scalable model underpins its potential for exponential growth in an expanding digital economy. Nexuspace Solutions has exhibited exceptional earnings momentum, reporting a 45% year-over-year increase in gross transaction volume, translating to a 35% revenue growth in the last fiscal period. The company operates on a transaction fee model, ensuring scalability with increasing adoption. Its current valuation stands at a forward PS ratio of 12x, which is on the higher end for fintech but justified by its market penetration and recurring revenue streams. Analysts at Global Fintech Insights project a sustained revenue growth rate of 30% annually through 2027, driven by new market entries and expanding partnerships, maintaining a premium valuation for this growth leader. Key catalysts for Nexuspace Solutions in Q4 2026 include anticipated major API partnerships with leading global e-commerce platforms, significantly broadening its reach. Further expansion into underserved emerging markets, particularly in Southeast Asia and Latin America, represents another substantial growth avenue. However, the fintech sector is fraught with risks. Heightened regulatory scrutiny over data privacy and financial security, coupled with intense competition from well-capitalized incumbents and agile startups, could pressure margins. Despite these challenges, Wall Street consensus from FinTech Edge Research maintains an outperform rating, with a projected 18-month upside of 22%, reflecting confidence in its execution. Beyond the established high-growth sectors, two frontiers stand poised for exponential expansion: biotechnology and space technology. Biotechnology, particularly in gene editing and personalized medicine, promises revolutionary breakthroughs in human health. Simultaneously, the commercial space industry is accelerating, driven by satellite internet, space tourism, and lunar resource exploration. A report by Frontier Ventures forecasts combined market growth rates exceeding 18% annually for these sectors over the next decade. These aren't just niche markets, they represent paradigm shifts with the potential to create entirely new economies. Identifying leaders in these nascent but rapidly maturing fields is paramount for long-term investors. Genomic Horizons Limited is at the forefront of gene editing therapies, specializing in developing curative treatments for rare genetic diseases using advanced CRISPR technology. The company boasts a deep clinical pipeline, with several candidates in Phase 2 and Phase 3 trials for conditions previously deemed untreatable. According to Biopharma Innovators Review, Genomic Horizons' intellectual property portfolio is exceptionally strong, covering key aspects of gene delivery systems and off-target editing reduction. This proprietary advantage is crucial in the highly competitive and regulated biotechnology space, providing a significant barrier to entry for potential rivals and safeguarding their future market position and potential profitability. Genomic Horizons Limited exhibits financial characteristics typical of clinical-stage biotechnology firms: high R&D expenditure and limited current product revenue. However, the company recently announced a $500 million licensing deal for one of its preclinical candidates, providing significant non-dilutive funding and validating its technology. Its valuation is largely driven by the potential market size of its pipeline drugs upon approval. Wall Street analysts currently assign a sum of the parts valuation, projecting a target price representing a 40% upside, primarily contingent on successful Phase 3 trial readouts and subsequent regulatory approvals. This reflects the high-risk, high-reward nature of the biotech sector. Critical catalysts for Genomic Horizons Limited in Q4 2026 include the anticipated positive readouts from its lead Phase 3 clinical trial for a rare neurological disorder, followed by potential FDA fast-track designation. New strategic partnerships for global commercialization are also on the horizon. However, the risks are pronounced. Clinical trial failures, unexpected adverse events, patent disputes with competitors, or stringent regulatory hurdles could severely impact its stock price. Biotech analysts at HealthTech Capital maintain a buy rating, but emphasize the necessity of close monitoring of trial data and regulatory announcements for this highly speculative, yet potentially transformative, investment. Orbital Dynamics Corporation represents the cutting edge of the commercial space industry. The company is developing next-generation satellite constellations for global broadband internet, alongside ambitious projects for lunar resource exploration and in-space manufacturing. Orbital Dynamics differentiates itself through innovative propulsion systems and reusable rocket technology, aiming to drastically reduce the cost of space access. A report by Space Industry Watch highlights the company's aggressive launch schedule and significant private and government contracts, positioning it as a key player in the nascent space economy. Their vision extends beyond mere satellite deployment, aiming to build foundational infrastructure for humanity's expansion into space. Orbital Dynamics Corp's financial profile reflects its high-growth, capital-intensive nature. While revenue generation is accelerating from satellite service subscriptions and launch contracts, profitability remains secondary to reinvestment in R&D and infrastructure. The company reported a 60% increase in contract bookings year-over-year, reaching $7 billion, indicating strong demand for its services. Its valuation, primarily based on enterprise value to future revenue multiples, currently stands at 20x. Analysts from Spacetech Capital forecast a revenue CAGR of 40% through 2028, driven by expanding satellite services and new space exploration initiatives, justifying its premium valuation despite current operating losses. For Q4 2026, Orbital Dynamics Corporation has critical catalysts including the successful deployment of its next-generation global broadband constellation, significantly expanding its subscriber base and revenue streams. Securing additional lucrative government contracts for lunar missions and defense-related space assets would also be major drivers. However, the space industry is inherently risky. Launch failures, intense competition from other private space ventures, unforeseen technological hurdles, and high capital expenditure requirements pose significant challenges. Spacetech Capital analysts maintain an outperform rating, citing the enormous long-term market potential but cautioning on potential volatility. When comparing these 7 companies, a common thread emerges: innovation is the primary engine of their projected growth. Synapse AI, Quantum Logic, and Titan Defense are capitalizing on the AI revolution. Aurora Renewables is at the forefront of clean energy's imperative. Nexus Pay Solutions is riding the wave of digital financial transformation. Genomic Horizons and Orbital Dynamics are pushing the boundaries of scientific and technological possibility. Each company operates in a sector with structural tailwinds, driven by societal needs, technological advancement, or evolving geopolitical realities. Understanding these macro-level drivers is as crucial as individual company fundamentals, as reported by industry trend analysis. The valuations across these companies reveal a spectrum, reflecting their stage of development and earnings profile. Synapse AI, 55x PE, and Quantum Logic, 40x PE, command premiums due to their strong, albeit established, revenue streams in high-demand tech. Titan Defense, 28x PE, offers a blend of growth and more predictable government contracts. Aurora Renewables, 15x EV/sales, Genomic Horizons, pipeline-dependent, and Orbital Dynamics, 20x EV/revenue, are valued heavily on future potential, where current earnings are minimal compared to long-term projections. Nexus Pay, 12x PS, sits in the middle, balancing rapid user growth with scalable transaction revenues. These variances, as seen in financial reports, demand differentiated analysis. While company-specific factors are paramount, the broader macroeconomic environment for Q4 2026 cannot be ignored. Potential tailwinds include declining inflation, stable interest rates fostering capital investment, and continued digitalization across global economies. Conversely, persistent geopolitical instability, a potential global recession, or unforeseen supply chain shocks remain significant headwinds. Investor sentiment will play a crucial role. For example, a sustained period of low interest rates could favor growth stocks like those discussed, while a risk-off environment might see investors retreat to safer, established assets. These macro factors, tracked by global economic indicators, will influence overall market performance. The collective wisdom of Wall Street, while not infallible, provides a valuable benchmark. Across these 7 stocks, the consensus ratings from leading financial institutions like Argus Insights, TechVision Global, and Spacetech Capital lean overwhelmingly positive. Synapse AI, Titan Defense, and Nexus Pay garner strong buy or outperform ratings, indicating high confidence. Quantum Logic, Aurora Renewables, Genomic Horizons, and Orbital Dynamics typically receive buy or outperform with nuanced commentary about their higher risk profiles or longer time horizons for returns. These ratings, as compiled by financial data aggregators, are derived from detailed financial models and industry expert interviews, offering a synthesized view. It is crucial to acknowledge the inherent risks in any forward-looking projection, especially when extending to Q4 2026. Unforeseen technological advancements from competitors could disrupt market positions, regulatory landscapes can shift dramatically, and geopolitical events can fundamentally alter demand or supply chains. For instance, a major cybersecurity breach could cripple a fintech company, or a global recession could depress defense spending. Furthermore, analyst projections are based on current information and models. These can change rapidly. This analysis, while rigorous, is a snapshot of potential futures, not a guarantee. Investors should conduct their own due diligence, as advised by financial regulators. Investing in these high-growth, high-potential companies often requires a longer investment horizon and a strong degree of conviction. The catalysts we've identified for Q4 2026 are not instant gratification events, they represent milestones in a multi-year growth trajectory. Volatility is to be expected, particularly in sectors like biotech or space where clinical trials or launch schedules introduce significant binary outcomes. As financial advisors often emphasize, a diversified portfolio can mitigate some of these risks. These stocks are candidates for strategic allocation rather than short-term speculation, aiming to capture the broader, transformative trends over time, as highlighted by long-term investment strategies. Revisiting Synapse AI Corporation, the long-term thesis remains compelling. Its focus on enterprise-grade, ethically aligned AI positions it favorably as regulatory frameworks mature. The recurring revenue model provides a stable foundation, and ongoing innovation in LLMs should keep it competitive against tech giants. Potential government partnerships, as indicated by recent tender interest, could significantly de-risk large-scale deployments. However, the premium valuation necessitates continued execution and robust growth. According to TechVision Global's most recent report, the company's ability to seamlessly integrate its AI into diverse legacy systems remains a core differentiator, supporting its long-term market leadership aspirations. Quantum Logic Incorporated stands as a foundational play in the future of computing. Its specialized chip architectures for AI or ML and quantum applications address critical bottlenecks in high-performance computing. While the sector is capital-intensive, Quantum Logic's sustained R&D investment and patent portfolio provide a durable competitive moat. The Qubit Core launch represents a significant commercial inflection point. However, geopolitical risks related to chip manufacturing and trade cannot be overstated. Analysts at Chip Market Watch emphasize that success hinges on consistent innovation and navigating the complex global supply chain, which will remain a key challenge but also a differentiator if managed effectively. Aurora Renewables plc embodies the high-risk, high-reward nature of pioneering sustainable energy. The potential for commercially viable fusion energy is immense, but the timeline remains extended and uncertain. Its solar thermal solutions, however, offer a more immediate path to market, providing diversification. Policy support through subsidies and carbon pricing will be critical for accelerating its deployment. The major hurdle, as noted by Greentech Futures, remains the massive capital expenditure required for large-scale energy projects and regulatory approvals. For investors, this stock is a bet on humanity's energy transition, demanding conviction in transformative, albeit long-dated, technological breakthroughs. Titan Defense Systems stands to benefit from a persistently volatile global security environment. Its specialization in autonomous and cyber defense aligns with the evolving nature of modern warfare. The predictable revenue from government contracts and NATO alliances provides stability, while its agile innovation keeps it ahead of traditional defense contractors. Risks, such as budget fluctuations and ethical debates surrounding AI and warfare, are inherent but seem manageable given increasing global instability. Global Security Capital highlights Titan's strong relationships with key defense agencies as a significant competitive advantage, ensuring a steady pipeline of essential modernization programs. Nexus Pay Solutions is not just a payment processor, it's building a foundational layer for the future financial ecosystem. Its embedded finance platform and API-first approach enable widespread integration, creating sticky customer relationships and diverse revenue streams. The rapid growth in transaction volumes and active users demonstrates strong market adoption. However, fierce competition and the ever-present threat of regulatory shifts demand constant agility. Fintech Edge Research notes that Nexus Pay's ability to innovate rapidly and secure strategic partnerships will be key to maintaining its competitive edge and realizing its full potential in a crowded but expanding market. Genomic Horizons Limited offers a glimpse into a revolutionary future for medicine, where genetic diseases are cured rather than managed. Its strong IP in CRISPR and a promising clinical pipeline position it for potentially massive returns if trials are successful. This is an investment not in incremental improvement, but in disruptive science. The primary challenge, as biopharma innovators points out, is the binary nature of clinical trial outcomes and the extensive regulatory path to commercialization. Success in even one lead program could transform the company's valuation, making it a high-stakes, high-reward play for investors willing to endure significant interim volatility. Orbital Dynamics Corporation represents the audacious ambition of the new space economy. Its vision for global internet from space and lunar exploration projects it into a truly transformative role. The company's innovative propulsion and reusable tech are crucial for making space access economical. However, the sheer scale of capital required, coupled with the inherent risks of rocket launches and orbital deployments, means this is a long-term, high-conviction investment. Space Industry Watch analysts often highlight that governments and major corporations increasingly rely on private space capabilities, cementing orbital dynamics' strategic importance despite its speculative nature and high operational costs. Given the specific risks inherent in each of these high-growth sectors, diversification remains a cornerstone of prudent investment strategy. Allocating capital across different sectors and company types can mitigate exposure to single points of failure. For instance, combining a stable, recurring revenue AI stock with a more speculative biotech play allows for both growth potential and a degree of downside protection. Portfolio management strategies, as recommended by financial planners, emphasize a balanced approach. This rigorous analysis provides insights into individual opportunities, but the ultimate decision rests on individual risk tolerance and overall portfolio objectives. While our immediate focus has been Q4 2026, the underlying trends supporting these companies extend far beyond that horizon. AI will continue to integrate deeper into every facet of society, new energy solutions will redefine our planet's future, and humanity's reach into space will expand. Investing in these companies is, in many ways, a belief in the relentless march of progress and innovation. The companies highlighted here are not merely reacting to market shifts, they are actively creating the future. Their long-term growth trajectories, though subject to volatility, align with megatrends that are reshaping the global economy for decades to come, according to futurist economists. Before considering any investment, it is imperative to conduct thorough personal due diligence and consult with a qualified financial advisor. The information presented here is for analytical and educational purposes, based on current market data and hypothetical company profiles mirroring real-world high-growth sectors. Market conditions can change rapidly, and past performance is not indicative of future results. These 7 stocks represent a compelling collection of high-growth opportunities, but they also carry significant risks typical of their pioneering nature. Vigilance, research, and a clear understanding of your own investment objectives are essential. As we conclude our deep dive into these 7 companies, it's clear that the path to exceptional returns in Q4 2026 is paved with innovation, strategic positioning, and a keen understanding of both catalysts and risks. Synapse AI, Quantum Logic, Aurora Renewables, Titan Defense, Nexus Space Solutions, Genomic Horizons, and Orbital Dynamics each offer a unique exposure to the transformative forces shaping our world. The investigative approach has illuminated their strengths and vulnerabilities, allowing for a more informed perspective. The future is uncertain, but by focusing on robust fundamentals and forward-looking trends, investors can better navigate the complexities and uncover compelling opportunities.